All right, to help set up the trading day, let's welcome in Kevin Hincks, the co-host of Fast Market. He's live from the CBOE. Kevin, good morning. So we're looking at some green arrows to potentially start the day, adding to yesterday's rally. And I have to say, it doesn't take all that much in terms of real news, just some headlines out of Washington that maybe we're going to see a softer stance on Powell and China.
Yeah, exactly. We are a headline-driven market. Caroline, good morning. And when the headlines change, that's what can happen to a market like this. Now, yesterday was all about de-escalating, right? China de-escalating. Tensions between President Trump and Jerome Powell de-escalating. Then you get to earnings after the bell and Elon Musk moving away from Doge and back towards Tesla. Then you get Boeing out this morning. Then you get fines from the EU, from Apple and Meta that weren't as much as expected. Now, breaking news just came out a few minutes ago. Vietnam just announced on their state TV that they are beginning trade negotiations with the U.S. So here comes the flood of headlines that were overwhelmingly negative, now turning the other way, Caroline. Buckle up. We're going the other way, at least for the short period. But right now, it's about the earnings. It's about all these names that we talk about, these widely held names that are moving large percentages today. You mentioned that the NASDAQ is up over 3%. I think this is going to be another big day, but watch the headlines. This has been a headline-driven market. I could give you a bunch of data on mortgage apps and other things that are coming out today. Doesn't really matter. The market's moving off headlines and, well, some earnings. Boeing's earnings were much better than expected. They're trying to change things in terms of how many planes they can make and deliver. So there's a bunch of good news out here, Caroline, to start the day. So far, so good.
Well, let's talk about Boeing because shares are poised to open about 5% higher following that better than expected report. So you said it was much better than expected. Talk to me about the key takeaways.
Yeah, I think they lost less money. That's a good thing. The revenue was higher. That's a good thing. They burned less cash. That was they burned, I believe the number was $2.9 billion. That's much less than expected. Kelly Ortberg, remember, he's only been in the CEO chair since August of 2024, so he's an engineering background. He's getting things turned around. Remember, they spun off a division yesterday for $10.5 billion in cash. So it looks like overall, now they're applying with the FAA to up production of the 737 MAX. That's the cash cow of this company. That's what's going to get them free cash flow. That's what's going to settle up the balance sheet. Remember, they also have a military part of the company that is not really sensitive to tariffs or anything like that. So there's just a lot of news out. It looks like on the surface right now, the recovery in Boeing is starting. Kelly Ortberg, only in the chair since August of last year, seems to have this company on the right track. Caroline.
Okay, so still losing money, but an earnings beat enough to really see a nice pop. It looks like for the full year, could see more than expected deliveries as well. Any commentary in terms of tariff impact from Boeing?
They did talk about they're being very cautious. And the mention that Kelly Ortberg said is they're monitoring some of the tariffs and how they might affect their business. So I think everyone, you have to, if you're a CEO, you have to address the tariffs. But, I can't imagine a situation where Boeing is not going to have a friendly relationship with the Trump administration and tariffs. Now, remember, China did come out and say they're not accepting planes, but China's only 2% of their orders. Remember, they've got 5,638 planes in back order. So they've got, planes in the pipeline, orders in the pipeline. It's just they've got to get production back to where it was. That means a friendly relationship with the FAA. That's the key. That'll bring in free cash flow. That'll settle up the balance sheet. that makes this company a lot more healthy. They've got to build planes and deliver them, Caroline.
Yeah. All right. Well, I see a headline coming out of the call. Our company is moving in the right direction, and stock moving in the right direction today as well. In terms of economic data, I know we got some information on mortgage apps. We have new home sales later today. What's the latest there, Kev?
Mortgage apps. Purchases down 6.6%. Refis down 20.9%. Remember, this is a volatile number. Week to week, we saw big jumps a couple weeks ago when rates came down. Now rates have eased back up ever so slightly, and you see that. The composite down 12.7% in mortgage apps. You're right, we'll get PMI composite flash here coming up in, half hour or so. Some of those numbers are expected, manufacturing expected to be 49.4, services 52.5. Remember, last month, that manufacturing number came in 49.8, but the final was back above 50. Remember, 50 is that big number. That's expansion versus contraction. So watch for numbers above 50 in services, right around 50 in manufacturing. And then new home sales expected to tick up slightly from last month's 676,000 to about 682,000. So that would be good news if new homes, remember, new homes aren't refinanced. New homes are people buying possibly for the first time. Let's see if we get a tick. Existing home sales are never going to be good because people with low mortgage rates aren't selling their homes. It's new home sales where you're hoping for some growth. That number expected to tick up slightly to 682,000, Caroline.
Okay, well, we'll check back in with you a little bit later in the show to get a read on new home sales. Kevin Hincks, thanks so much.